Hello, for this wealth building video, I'm going to be speaking about real estate. Real estate's another one of the assets that tends to outperform inflation over time and is one of the significant factors in people that have built wealth successfully. It either comes through real estate, the stock market, or owning a business themselves. So I'll dive into the real estate. One of the big differences with real estate when you compare it to the general stock market is it's going to be primarily focused on generating cash flow. And that sounds really attractive to a lot of people because what you're able to do is create another income stream in addition to your salary or your work that you're earning income there. And so that's one of the primary drivers for most people choosing to invest in real estate. Real estate could also go up in value after you purchase it, or could go down as well. So there's always that possibility. You always want to weigh the risk and reward for what you're trying to achieve there. But essentially, one of the things is even if it does go up in value, it's really tricky to unload it and sell real estate. So most of the times when people are investing in real estate, it's more for longer term purposes, even longer than when you're thinking about the stock market. And the reason for that is because it's not liquid. There's no button you could sell and just get the money in the next week or so. Selling properties takes a long time. There's a lot of paperwork and things involved. And it's costly too, right? Because most people or professionals that you'd have to interact with will take their cut in the form of commission or some other fee. And so you don't generally want to be buying and selling real estate every single day or even every single year. Typically, people buy real estate, accumulate it, and start to accumulate different revenues of cash flow from that. Another thing that I want to make sure I share with you is there's a wide range of different investment types, and sometimes there's going to be ratios that you'll want to take a look at. This isn't my area of expertise by any means, but if you do some research, you start to talk with someone that's in the real estate world, they'll tell you that there's certain calculations that you need to run to make sure that investing in a property makes sense, especially when you compare it to all the other different options out there. And there's a wide range of risk. You could be trying to hit a home run out of the park, and in order to do that, you may have to take a lot of risk associated with that. That may not be comfortable for someone, so they may choose to opt to take something a little bit less risky, but you're not going to receive as much of an income incentive from making that investment. So that's always going to be a situation whenever you deal with anything in life. Basically, you always have to do your calculations and make calculated risks as far as what you want to do there. If owning real estate and either managing it or managing it sounds horrible to you, that's something you can also outsource. So that's one thing that people that are not very handy or just really don't have the time to mess with real estate property, they'll outsource that to a property manager. So that's one way. Obviously, that's another layer where you'd have to pay someone, so that would reduce your returns a little bit, but definitely something that a lot of people do. Another alternative would be investing in the market in real estate, and you can actually do that because there's companies that are specifically set up to manage multiple properties, and you basically can buy an investment in a whole slew of properties, and those are typically called real estate investment trusts. So that's all the information I have for you on investing in real estate. I encourage you to do additional reading, do your homework, talk with a professional if you are severely thinking about moving down this path. And I guess lastly, one difficult thing is kind of that access to the real estate market, right? Typically, you need a source of funds to be able to invest a large sum into real estate, or alternatively, you could go out and borrow funds. Borrowing funds against a property that you're hoping is going to add enough value for you is going to be additional layers of risk and additional layers of cost. So those are things that you just definitely should pay attention to. Hopefully that's helpful, and feel free to reach out. I'm going to tag a couple of my buddies that I know are in that real estate world, and I'll ask them to add additional comments to the video below. Take care.